Hi everyone, this is Bill Miller, real estate investor in Austin, Texas. And in this video we're going to explore a different way of doing rental properties, and that way is commercial properties. There are some variations, and actually if you really want to know more about it, Robert Kiyosaki gives a very good introduction to this in his book series, the Rich Dad series. But for purposes of this video, we're going to go into a brief overview on what this sort of investing is. So here we go. Commercial real estate investing can offer a very stable investment for a landlord pursuing this. And one of the main reasons for this is that the lease terms are very long. They can be anywhere from 10 to 20 years duration. And in many cases, the day-to-day operation can be quite hands-off for the landlord. There are several ways in which a lease can be arranged with a tenant. We're going to touch on what the different lease structures are. Very simply, there's two different types. There's the gross lease and there's the net lease. The gross lease is one in which the landlord pays all the expenses, such as utilities, maintenance, janitorial, taxes, and property insurance. And the net lease is where the tenant pays some or all of the expenses. We're going to talk about the gross leases first. The full-service gross lease is a type of lease in which the landlord will collect rent, but will be responsible for all expenses, including maintenance, utilities, taxes, and insurance. A modified gross lease is one in which the landlord passes all the expenses to the tenant, such as maintenance, taxes, insurance, and utilities. This sort of lease is common in multi-suite office buildings in which each suite has different electric and janitorial needs. So now on to net leases. Like the modified gross lease, the net lease is set up so that the tenant pays not only the rent but other expenses. There are several different types of net leases. The single net lease is one in which the tenant pays the rent and the property taxes. In the double net lease, the tenant pays the above plus property insurance. In the triple net lease, which is actually the most popular type of net lease, the tenant pretty much pays all the expenses including maintenance. This is obviously not a desirable lease for the tenant. Single tenant office buildings are typically leased in this way so that the tenant pays for all the expenses. So in summary, as you can see, there are different ways to structure a lease in commercial real estate investing. And it will depend on what type of commercial property it is and also what terms the landlord and tenant agree to. So next time, we're going to talk about an alternative way to making money in real estate other than buying rentals and playing landlord, and that way is flipping. Many believe that this doesn't really work anymore, but in recent news, this has actually been making a comeback, and it can be very lucrative if it's done the right way. So I want to thank you for watching. My name is Bill Miller at startrealestatewealth.com, and click on the link below and head on over to the next video.